Dirk, you want to start by saying a few preliminary?
Well, yes, good morning, everyone. I see already 80 participants have signed in. Big thank you to the speakers and panelists to attend this session. Thank you to Pranav for organizing it and the ILO's team for hosting it. So welcome to day 2 of the International Conference on Inclusive Insurance. And today we'll be talking about climate risks, 4 great sessions around climate risk insurance. So thank you very much for joining, and Pranav, I hand over to you.
Thank you, Dirk, and welcome everybody once again for tuning in. It's the first session of an exciting day that focuses on agriculture insurance, parametric insurance, index insurance, and various issues related to it. And we will start the day today with a very, very important topic that has not new actually, but requires a bit of attention because we've been kind of learning from various models across the world that have been using this model, which we call public-private partnerships. While we talk public-private partnerships and it is recognized as partnership between government and the private sector, there are a lot of players that actually constitute this entire model and mechanism. There are people who help out with loss adjustments. There are people who help out with distribution. There are people who help out in providing funding. There are people that actually do the assessments on the ground and work with that. So it's a lot of stakeholders who actually come around with the fact of what we call public-private partnerships. The emphasis is on the word partnerships because we feel that everybody has a distinct role to play. We at the Impact Insurance Facility at the International Labour Organization are very excited about this model because, as you can see in the background, you see 3 keys, which essentially are the 3 keys to the ILO, where we work very closely with the government, the workers, and the employers. So the entire mechanism is very well represented here. And as we go along, we've learned that the more we kind of try and understand the topic from the other's point of view, the more rich and more efficient the mechanisms become. Over the years, we've been working with various governments and with various levels of government and organized meetings where we've had one country learning from the other and contributing to each other's experiences. But one thing is quite clear, that while public-private partnerships are now the part of the game, issues around their efficiency and sustainability in the long run are still being talked about. Results have been mixed. Yesterday, we heard about the importance of public-private partnerships. Geron's very nicely mentioned a greater role for them under the current COVID situation. And I think as we've gone along, we've seen that let's say when I started out talking about index insurance in 2004-05, agriculture insurance per se used to be kind of a peripheral topic when talking of inclusive insurance. Now, no discussion is complete without talking about agriculture index insurance and the issues around smallholder farmers. The good part is that agriculture has always been a very prominent part of any economy, giving employment to almost 70-75% of the workforce. However, the issues around agriculture have not really been understood very well over time. But now, with the prominence of all the mechanisms that are available, with the number of actors that have now come into play, including technology service providers, it's gaining a very prominent place in the entire discussion about inclusiveness. We've seen the movement towards more accessibility. We've seen topics being discussed about doing no harm. We've seen the basis of agriculture insurance becoming prominent more in the times of the discussions of climate change, and using it as a base for building resilience in the economy. During the current COVID crisis, we've also seen that perhaps the only supply chains that remain consistent have been the agricultural food supply chains. Yes, non-food supply chains have been impacted, but economies like India that have degrown by 24% have seen a 3% rise in the agriculture sector. So if we can build in mechanisms to provide better risks, I think the overall structures of economies would be better off. We've heard a lot about who does what, who should drive these public-private partnerships. Should government be the driver? Should private sector be the driver? We heard yesterday about the public sector playing a more prominent role. But on the other side, we have two large programs that are currently on, whether it is the Kenya Livestock Insurance Program or the Index Insurance Program in India. They both started out in the private sector, demonstration cases were built up, and the governments then took them on to scale now. So it's a bit of a conundrum between who does what, who is primary, who's not primary, who should play a supporting role, and the support and the velvet glove of the government, what forms should it be taken? So we'll be discussing all these issues around that. And we have a wonderful panel to do that with us. But before we go into the panel discussions and with each of the speakers, a few of the housekeeping items that I'd like to share with you. Today's session is scheduled to be 90 minutes, including the Q&A. Of course, all of you are currently muted, but we will be taking your questions and we will be hearing from you. Please submit the questions in the Q&A feature, not in chat, so that there's one place that we can track. While submitting your questions, can I request you to please try and highlight to which of the speakers the question is being addressed so that we can track it efficiently. The session is being recorded and will be made available online. All the presentations also will be made available online through our wonderful host, Munich Re Foundation's website, as well as through the Microinsurance Network. Please do feel free to message MIN executive team via the chat for any technical issues. You'll see MIN executive team on the schedule also. So we look forward to hearing from you through all these mechanisms and look forward to a great discussion. So given this small background about what the issues around public-private partnerships is, let me invite our first speaker today and discuss with you, Srinivasan, on what are perspectives from the Ford Foundation. You have worked in the field of agriculture for a long time. Now with these issues of climate change and disasters also coming in, the issues and the relationship with agriculture is now more accentuated. And you've been supporting programs in the countries to improve the efficiencies of public-private partnerships. So what is Ford Foundation's interest? What is it that you are looking for that you would see these models contributing to? Over to you, Srinivasan.
Thank you very much, Pranav. Good morning to everybody. It's a pleasure to be here. Ford Foundation works across several regions in the world and is committed to advance social justice and reduce economic inequality. For this, we recognize that the government needs to play a central role. And there's also a role for the for-profit private sector in creating opportunities for employment and value creation, in service provision, etc. We also recognize that there is a need for the not-for-profit sector, which is not to say that this sector doesn't make profits, but it's not fundamentally designed or oriented purely to make profits. It should do what the governments cannot do and what markets and for-profits won't do or do not have enough incentives to do. And I'll try and explain that shortly when we turn to the specific case that I intend to present, which is related to crop insurance of small farmers in India. So first, a couple of sort of comments on the background of small farmers.
Srini, before you launch into the case, I think now that we are 10 minutes into the session, I think it might be good to see who all is in the room so that we can then adjust our rooms to that. So let me run a first poll to see who all is attending and the number of participants and what engagement that they present. So can I request yours to launch the first poll, which essentially looks at the kind of representation in the room so that we can suitably align our responses to that. So what's your background? What kind of engagement do you represent? Are you from the insurance industry? And when we say insurance industry, it's across mainline as well as inclusive insurance. Are you from a development sector, development organization? Do you represent the government? When we say financial service providers, we mean all financial services, banks, microfinance agencies, academics, service providers, whether technical service providers, consultancy services, weather services, and anything else that you may be doing. Great, so we have a kind of a fair representation from a lot of things. Can we end the poll now and display the results? Thank you. So Srini, this is a good lead into what you're about to say. We have almost 40% people from the insurance industry, and we have a fairly healthy representation of the government as well as service providers here, plus a lot of people from donor and development sector. So given this background, over to you, Srini, for your comments on the cases that you were talking about. Back to you, Srini.
Thank you, Pranav. No, that's extremely interesting. When we see the number of participants and where they come from. Yes, so let me turn back to the case of small farmers in India. 80% of cultivators in India are small farmers. So this runs into several hundreds of millions. And by small farmers, the definition is those whose operational holdings are less than 2 hectares. So it's really, really very, very small. And almost all of them, that is just 40% of the net area sown is irrigated. So most of them are dependent on seasonal rainfall. And that makes farm yields extremely susceptible to climate variations. The rainfall pattern is extremely unpredictable. And these farmers have very, very low level of other endowments. So their capacity to pay for insurance, their capacity to absorb impact of adverse events is all very low. So this makes them extremely vulnerable. Now, for mitigating risks, you actually need a mix of interventions. You need government investment in natural resource, public goods such as weather information systems, science and technology to promote more resilient crops, and more importantly, you need crop insurance. Now, more recently, the Indian government has launched the Pradhan Mantri Fasal Bima Yojana, which is a crop insurance scheme, which is very, very ambitious in scope. And it accords a very crucial role to the private sector, the for-profit private sector. Here, it's weather events or patterns which are the trigger for damage assessment. And the government identifies and contracts private insurance service providers. And a premium subsidy is paid to the service provider, with a nominal share being paid by the farmer, because it's found that small farmers are unable to afford premium, which actually ranges typically. However, there have been many challenges in the implementation of this program across the country. The most important challenge is very small operational holdings, and that therefore makes transaction cost very, very high if an insurance service provider or the government seeks to reach out and cover.
Srini, we can't hear you too well.
Besides many farm, okay. No, I'm sorry. I mean, my own internet connection is unstable, so I can't really do much, I'm afraid.
No worries, it's reflected.
Shall I continue?
Of the yes, please do.
Yeah. And also we must remember the coverage is often driven by just a small subset of crops or by those who borrowed from banks, which means the banks insist that the farmers cover themselves by the insurance program. In addition to coverage, there's also a challenge in the enrollment process. Further challenges include damage assessment, in part because of small holdings, in part because of multiple crops and crop varieties. And damage assessment is typically seen as extremely uneven and arbitrary. Claims, there are lengthy delays in claims and there's a lack of transparency, and this therefore comes in the way of credibility of the entire system. And finally, there are administrative issues such as delays in selection of insurance service providers and short-term contracts. So we at IFAD decided that for us to make this crop insurance program effective, to make what the government offers more impactful, it's important for us, on the one hand, to increase the enrollment of small farmers. On the other, it was important for us to work on the damage assessment system so that there is both greater credibility as well as greater accuracy, and to also assist in the process of filing claims. So what we did was that we supported a number of organizations, and in fact, the ILO 2 was a partner in this instance. And we found that the relevance of public-private partnerships, and in this case, private agents, both for-profit and not-for-profit, was extremely useful. On the one hand, we aimed for higher scale by wider inclusion. In addition, we tried to establish credibility of the insurance scheme amongst farmers. The inclusion and enrollment included education of clients, of small farmers, and to also work on simplifying due procedure. We provided feedback to the government and to private service providers when they encountered challenges. And we supported innovation. And innovations in particular related to damage assessment, where we also drew upon sort of satellite-based imagery, drones, and a whole lot of other digital technology to enable more accurate and faster damage assessment. The partnership is still on, and we've got very, very encouraging results. But I'll stop here for now. Over to you, Pranav.
Thank you, Srini. So I guess you're saying that there's a definite role for encouraging all these issues around improvements in the enrollment process, around supporting with public funds for the loss assessment and the loss verification process, issues around improving awareness and understanding of the participants, where you feel funding organizations and the public sector can play an effective role. So thank you for these inputs. Using this as a background, let me change the geographies and see how a particular scheme involving the public-private partnerships is being implemented in Uganda. It's our pleasure to have with us Munyaradzi Daka, Munya for short, who works with a very incredible model of a consortium, which is actually housed at the ministry and works very, very closely with the Ministry of Finance there. So Munya, my question to you would be, you've heard Srinivasan mentioning several challenges, even in large public-private partnership schemes. how is it being implemented in Uganda? What are the issues that are being faced in Uganda that you are trying to overcome using this scheme? And let me just get your presentation up so that we can then quickly go through an understanding of what it is, and then we'll have some follow-up questions. Over to you, Munya, to take us through your scheme and the issues and challenges around there.
Thank you. Good morning, everyone. It's morning for us here. I don't know wherever you are. So Uganda is operating an agriculture insurance scheme. It's a national scheme that started in July 2016. I think if you can move to the next slide, I could start on the presentation. So it's based on a public-private partnership, and the aim was to help mitigate the financial losses that the farmers were suffering due to the ever-changing weather, and climate conditions. So the government of Uganda then decided that they would be able to provide an insurance premium subsidy to the farmers, so that they can actually lighten how much the farmers would pay towards the insurance, and in this way also help to make sure that the farmers do uptake in insurance, since it will be easier to access. So this can be done directly by the farmers themselves. They can take it directly, or they can go through the participating insurance companies, or through credit that they obtain through the financial institution. So the government currently provides about $1.5 million per year towards the subsidy, and with a view to always look at increasing should demand become more and more as it goes on. I think we can move to the next slide. So how it came about, the scheme, to make sure that the national scheme works well, we had to make sure that we have stakeholders that that come in and make sure that we tick all the boxes according to the stakeholders' requirements for it to be successful, for the scheme to be successful. So initially, the start of the whole scheme was based on the on a committee that was formed. A national committee was put together through the Ministry of Finance, where the different stakeholders were invited. In the committee, you have the Ministry of Finance, the Ministry of Agriculture, Bank of Uganda. You have that's on the public. On the public side, you have the regulator on coming in also on that public side, and then you also have the private sector represented by farmer associations, the insurance industry itself, and NGOs and other different service providers. For example, those that provide monitoring services for weather index products, and those that will also come in and provide assessments and adjustments and different things like that. And then under the umbrella of the Ugandan Insurance Insurers Association, the insurers decided to come together and form a consortium, which we call the Agro Consortium, of which 11 insurance companies act almost like a pool, like a co-insurance pool, where they share all the risks that all the agricultural risks that are underwritten. So on a co-insurance basis, they all will benefit from each of the clients that each of the insurance companies pay. So that also spreads the risk around them. So these were the stakeholders that came in and formed what we now call the Uganda Agriculture Insurance Scheme. So as I said, the consortium is actually the insurer of the scheme. It's currently got 11 members out of the 30-something insurers that are in Uganda. and is administered by a secretariat and is housed at the Uganda Insurers Association. So the secretariat will act as a liaison between the government agencies through using the association also. So it will act as a liaison to the government agencies, to the government itself, the ministries, and also then act also on behalf of the insurance companies, and also interacts with NGOs, especially those that come in to help with development of products and research and things like that. I think we can go to the next slide. The objectives of the agriculture insurance scheme for Uganda were 4 in broad, and with a mandate for each of the stakeholders. So for the consortium itself, among its mandates were sensitization and awareness, and also the underwriting of the actual agricultural risks. So you would have the secretariat and the consortium members pushing awareness and sensitization to the farmers, and in consultation and also in coordination with the government agencies that are there, and also the development partners. This, in a way, is to make sure that there's an increase in uptake of the insurance, and also for people to actually be aware that this insurance can actually help them. It's either for the large scale or the small scale farmer, with a lot of emphasis on the small scale farmer. The scheme currently has almost 90% small scale farmers, and in the definition of Uganda scheme, the small scale farmer is anyone doing less than 5 acres of cultivation in the land of the land. Then on the government, it will provide the subsidy, and the other government agency, like for example, on the national the meteorological authority, will look at providing data on weather, and also the other ministry organizations, like maybe the Ministry of Agriculture, would also provide data on production in the different districts and areas in the country. So data support mostly comes from the public sector. Okay, and then lastly, the financial institutions then also just to make sure that there's also increase in access to credit from the financial institutions, so that they can mitigate the lending risks, and actually also lend more to the, especially to the small scale farmers who might not have the collateral that they normally require if they were to give credit. Okay. Next slide. So just to give you an example of how it flows, if you're a farmer, you can go directly to a financial institution to get a loan, and then the financial institution will insure the loan, the insurance part of the loan with the insurer, or you can go directly to the insurer, as you can see in the diagram. Or you can use the traditional means, go through a broker or an agent or an aggregator, who will then come to the insurer. Then from there, the insurer will now cede this business to the consortium, which will share among itself, and the reinsurers will support the scheme. And then after you have gotten the onboarding of the farmers, the consortium now would then do a schedule for recovery, which it will send to the regulator for verification, and also to check that the actual beneficiaries are actually real and are actually there. And then after they've approved it, it then sends to the Bank of Uganda for payment through the Ministry of Finance. So basically, that's how it works. This was to try also and make sure that we put in a bit of checks and balances throughout the system for it to flow much better. Go to the next slide. So just to give an overview, the scheme, like I said, started in 2016, but the first 6 months were more of setup. So in earnest, the scheme actually really started writing business in 2017, and we've seen a steady growth of the number of farmers insured and the premiums. And what is encouraging is that for Uganda, the loss ratios still are very, very favorable. And it looks like what we're collecting in terms of premiums and the claims themselves is a bit consumerate as for now. So this was just to give an overview of what has happened in the last 3 years. Okay. I would like to talk about the challenges so that for those that are also thinking of going through certain such schemes, from lessons learned from us, is that it's very important to know that claim payments, even premium setting of how much premium should be paid, or even the products, can really be influenced by political pressure, because sometimes there is need to push for payment when it shouldn't be paid in the normal basic principles of insurance or the products. So to go around most of this, we had a few solutions there that were developed, and we keep on developing. One of them was to just make sure that each of the stakeholders, the objective and their role in the scheme are very specific and agreed and understood by everyone. So one of them was to just clarify that the objective of the government was to promote the insurance by optimizing their role in just policy setting and also giving an enabling legislative environment through their various agencies and arms, and also to then make sure that the private sector is harnessing and driving the whole scheme from the private sector side to ensure also continuity and sustainability afterwards. The other issue was to make sure that also there's ring fencing of that financial support, the premium subsidy that I talked about, because you do not want to have in our case a scheme where the government, maybe in case of small scale farmers, provides 50% subsidy, and then once the farmer pays their 50%, the insurers fail to collect the balance from the government. So to make sure that does not happen, to make sure that you ring fence that support. So that's when the Bank of Uganda came into place, where at the bank sits an escrow account where it holds just this subsidy, and we draw down from that subsidy, which has already been put in that extra account, so it can be used for anything else except for subsidy purposes. And also, it is good to establish very strong links at the even before you start the schemes, and have reinsurers be part of the whole scheme to ensure that you have the necessary support technically and everything, including premium setting and also technical support in terms of the bigger claims. Okay, I think you can move to the next one. Is okay. So more on the lessons learned, we learned that you need to engage all relevant stakeholders fully, so that there's the support for the public-private partnerships. So you can see from my second slide, I talked about having us reached out to all these different stakeholders to make sure that they have an input into what we were doing. Ring fencing, I've talked about the subsidy funds. And then consortium approach for us in the insurance service providers works a lot, because then there's no different standards and procedures between the different players, since it's a national scheme. And also to just make sure that the overall principles and practices of insurance still form the basis of the scheme, so that you don't have that political influence changing how you pay claims and then affect the scheme itself in the end. The scheme, we feel that if it's driven by the private sector with the support of the public sector, then works well. And then that premium setting and claims handling experience has shown that undue and inappropriate political influence on an insurer can be very, very damaging, because you end up paying where you shouldn't be paying. I think that's from our side here.
Great, thank you very much, Munya. Your experience highlights the various roles and the different specific roles that each player plays in it. And what is very interesting, that it's the Ministry of Finance and the overlap with Ministry of Agriculture that's driving it. So that's an interesting kind of a model in which that it works. While we understand that 3 years is still a short period of time for schemes to happen, so the number of farmers that you talked of, 174,000 farmers, approximately how many farmers in Uganda are actually getting covered by it? Around what percentage of farmers would the scheme be covering? Munya?
Sorry, can you repeat?
The 174,000 farmers that are being covered, what percentage of overall farmers in Uganda would they be representing? So what's the coverage of this scheme?
Okay, we estimate from our discussions with the Uganda Farmers Federation that the very active farmers that could be ready for insurance, about 3 million. So the 174 is still a small percentage, maybe about 5 or so %. But it's like I said, we are on 3 years on in the scheme. And with more sensitization and awareness, I think we should be able to move on to bigger numbers as we go.
Great. So this is a nice start to the scheme. The model is still getting, as they say, validated by the various actions that are there. So we'll come back to you, Munya, with a couple of more questions about the program as we go along. But let me kind of now open the discussion slightly to include a very important aspect that you mentioned. You mentioned the role for reinsurers and the inputs that they can provide both for product structuring as well as for pricing of the product. And we certainly believe that with the growing influence of the climate change, the roles for having appropriate products and appropriate responses to the risks is important, where the reinsurance industry and the reinsurers can play a very important role. So let me invite Mario Wilhelm at this stage. Mario is with Swiss Re, who I wouldn't even try and introduce. We all know about Swiss Re. Anybody who's worked in agriculture insurance would have worked with Swiss Re at some point in time. So Mario, I think the ball is in our court to kind of tell us how this expanding influence of movement from agriculture insurance to climate risk insurance overall, including disasters, etc. What role can the reinsurance industry play, and what have been the lessons so far? So over to you, Mario.
Yeah, thank you very much, Pranav, for the introduction. Good morning, good afternoon, evenings to everyone. It's really a pleasure to be here. Public-private partnership and climate insurance is a very broad topic, and we have heard already from two very concrete cases, India and Uganda. So I thought before continuing, maybe we take a step back, discuss a bit why we're actually discussing climate insurance and the role of public-private partnerships. And I would also like to create a sense of urgency for this topic. And maybe we can go to the next slide. Because climate change is a reality, right? Everyone can experience it, and we also believe there's not much time left. So actually, we might reach a tipping point where these kind of events, climate-related events, don't become insurable anymore. So it's our collective task, right, to keep working on the topic, to keep it insurable, and to do everything we can, and that goes over and beyond insurance. So just to give you an example, what Swiss Re committed to is that we're in a transition to net carbon zero for our own operations by 2030. So we put a three-digit carbon levy on our operational emissions, such as flights. And I think just the fact, that Munich Re Foundation, Micro Insurance Network decided to go virtual with this conference, with all the flights saved, I think it's the right development, right, where we also do our part in trying to reduce carbon emissions. But back to the insurance topic, and that's the topic here, it's quite evident that the economic and the insured losses due to weather-related events go up, and that's what you see on this slide. So last year, we had a total of 146 billion economic losses, and only 60 billion were actually insured. And the majority of these disaster-related losses and economic impact were actually climate-related. So it's really the majority. And with that, we would like to ask the audience, and Pranav, maybe I can turn back to you for the poll for the next question we have.
Sure. So what we are interested in understanding from the audience is the relationship between climate change and the weather-related losses and the large losses that are happening where public-private partnerships become more important. So the question to the audience, and I will request Joost to launch the poll now, is that is climate change responsible for this rise in weather-related losses? It's a simple yes, no. There may be hundreds of other reasons why big losses happen, but what does the audience feel about the link with climate change? You have a few seconds more to answer this question. We have an overwhelming response towards a particular answer. I will display it in a bit. Okay, wonderful. I think a lot of you have voted. Thank you very much for the inputs. Can we end the poll now and show the results? There you go. As you can see, almost 95% of you feel that, yes, it is strongly correlated to the climate change that is happening and the issues that we are all facing. A few of you also feel that there may be other factors at play, and we'll try and incorporate that also in our future work as we go along. But Mario, I think the audience is overwhelming in responding, in creating this link between climate change and weather-related catastrophic losses. So therefore, the role for insurance, I think, is more highlighted. And I guess that's what Swiss Re is helping us with. So back to you, Mario.
No, thank you, Pranav. And it was also a test whether everyone is awake. So good to see that 90% see that point. But, there's also 5% that, no, maybe it's not the main factor. And I just want to dive into that because there might actually also be a case for that. So, the impact of climate change on these losses is not proven yet. It's such a complex, interdependencies between different factors leading to those losses that it's difficult to prove it. But the lack of proof does actually not mean that there's no proof there's been no change. We see and feel the effects of climate change. It's already showing, you know, we have warmer average temperature, we have rising sea levels, we have more frequent, also longer heat waves, we have greater weather events, and we also have erratic rainfall patterns. So that's all showing us that something is happening. But in our work, in our research, it's also quite clear that there are other contributing factors, and the two major ones is actually urbanizations. I mean, more people live in cities, and many cities are in coastal areas that exposes those cities to climate-related events. Right? It's a big factor. And then it's also the high concentration of economic assets in those areas that is also contributing to the increasing loss trend. So we also have to be aware of these factors playing in, like urbanization. So to continue now, just and to finish off on this point, so we also believe that warmer temperatures will lead to growing frequency of extreme events and rising losses. So this trend is going to continue. We might only see the start, and that's, you know, creates the sense of urgency for us to act. And I also want to mention this context that one focus is on what we call secondary perils, because oftentimes it's one event that comes with another event. So for instance, if you take a typhoon, it's often followed by extreme rainfall. You know, it's a tsunami after an earthquake, like in Japan, or it's the storm surge after a cyclone, like Cyclone Ida in Mozambique. So these secondary perils are oftentimes the ones that actually caused these losses. So we really have to keep them on the radar. So we are dealing here with a risk at scale that also requires intervention at scale and also risk transfer at scale. And if you can go to the next slide, I can show also how we engage Swiss Re as a reinsurance industry as such, because we are not alone in that game. So Swiss Re has established maybe the first public sector team in the insurance industry around 10 years back. Public sector to us, it's not only governments, it's international organizations, it's NGOs, and it's also the development banks. So basically all public stakeholders who have a role to play. And over the past 10 years, we've executed around 600 transactions with the public sector. And in 2014, we also made a commitment to provide around 10 billion insurance capacity to sovereigns. So we have achieved that target actually last year. So we have now consulted around 120 sovereigns and sub-sovereigns on the topic of risk transfer. So now, what's the role of a reinsurer in these public-private partnerships? It's quite evident. Our core proposition is capacity. So someone has to pay the bill, because the losses are oftentimes right in the 3-digit millions, it's in the billions. And that requires a large balance sheet, a lot of risk capacity that, you know, can be drawn on in a case of a payout, in a claim. And, you know, the losses are at a scale where oftentimes the local insurance company wouldn't be able to pay for those losses. That's why you need reinsurance, and oftentimes these risks are so big that the different reinsurance companies again share those risks. So they participate on a reinsurance panel, and some of the risks are even transferred to the capital markets in the form of cat bonds. Now, diversification is another big topic for the reinsurance industry, because we have a global presence as an industry. That helps us also to diversify between the different risks, between the different perils, but also between the different geographies. So that's one important factor. And with that work, you know, there's a lot of underlying research, a lot of risk modeling activities that come with it. So we do our risk modeling in-house. So we have models for flood, for hurricanes, for earthquake. And with that, you know, we can also provide advice, we can provide insights on these big risks. And we also make it accessible. In our cases, with the Swiss Re Institute, they regularly publish these Sigma studies you might have seen before. And last but not least, what I want to mention here is product development. Right, so we constantly assess latest advancements in, for instance, index products that can be used. We have a lot of experience when it comes to structuring those solutions to also make sure that these solutions find a market, which is quite important, right? If you want to implement an insurance scheme. And maybe just to continue also and pick on one case studies, as you can see here, you know, we have also many climate-related case studies, and these are all public. That's why I can show them here. So weather-related events have an impact on different sectors, and that's where risk transfer is needed. So if you think about drought, it can be the agriculture sector, the agricultural value chains which are impacted, but it can also be the energy sector. Many developing countries also depend on hydroelectric production. Again, the risk of drought is quite imminent. On the flip side of drought, you have excess rainfalls, which can result in floods. And last but not least, we have also hurricanes, tropical cyclones, typhoons. And there's several case studies for that. If I can pick on one, you know, I would choose the Kenya livestock insurance program, was mentioned before. And we also stay with that in East Africa, it's a neighboring country to Uganda. There, it's in the north of Kenya. It's a very dry area. People there actually live from livestock. That's the main assets. And you can imagine in case of big drought, that's a big risk to the main asset, livestock. That could be cows, could be goats, could be also camels. And as Pranav mentioned before, a private sector initiative eventually translated into a bigger scheme that was picked up by the Ministry of Agriculture together with the World Bank to protect those herders in the north. And the index that was chosen is an NDVI index, so that's optical satellite data that kind of takes pictures from the surface of the earth. And very simply put, if the surface, this color, turns from green into yellow, the insurance mechanism is going to pay out. And it's meant to pay out very early in a drought event. So the intention is not to replace dead cattle. That can be very costly. The idea is actually to provide a payout so that the herders can get the livestock through the drought. So they will get cash payments so that they can buy water, forage, grass, whatever needed to keep the livestock alive. And this program is quite a success. Currently, it's reaching around 20,000 households, almost 100,000 livestock units are being insured. And the idea is now really to upscale that to replicate it in the region so that more herders can actually benefit from that insurance protection. So I would like to leave this slide. You know, there are many case studies we can talk about, but in light of time, I just want to share a couple of lessons learned from our insurance PPPs worldwide. And I try to put it in very simple words. It's think big, start small, scale fast. Why do I say that? First of all, think big. Climate change is a global issue, as I have just shown. So it really requires a long-term vision and also solutions at scale if you discuss insurance. And that's really quite important, because if you want to make a difference, we have to keep that in mind, right? It's really a complex problem. It's a complex challenge. It's a long-term challenge, and it's really big. The reality is, and that's also our experience, is that many public-private partnerships fail because they don't follow this long-term vision, and they also fail to articulate these ambitious goals. So I think many public-private partnerships rather find themselves in a situation where they implement pilots, celebrate proof of concept, and then the question is, what do you do next, right? So after the pilot, what are you going to do with it? And many projects actually stop there. That's something we are observing. And I would actually say, or argue here, that most pilots that are being implemented are no pilots. It's more like prototypes where you test certain features, be it a certain index, a certain distribution mechanism, but oftentimes they are not geared towards scaling. And I think that's a wake-up call for us. because we also need to make very efficient use of the public resources we have at hand, right? That we really tackle this large scale problem. Nevertheless, if you have defined your goal, your vision, you came up with a business plan and a value proposition for that, you have to start with a pilot, simply because if you want to fail, you want to fail small scale, right? And you want to fail quick. And that's why we have these pilots. So it's really essential part of any strategy. And in these pilots, what we usually test, is how do you reach clients? It's the distribution models that was also shared before in India and Uganda, which is really a challenge. It's about the products. Products need to be tested, need to be refined. They improve also over time. It's about models. It's about data availability. That's also something that evolves over time. It's not there from day one. And then it's also about claims processes, because that's the key role of insurance here. Question is, how can we make sure that the money eventually also arrives on the household level with the smallholder farmer, which is oftentimes challenging given the infrastructure you have in many countries. So, we look in these pilots into all aspects of the value chain, and the idea is really to pass a reality check for what has been conceptualized. And these pilots certainly then provide the insights and might help to identify and also overcome teething problems in a very early stage. And then my last point on scale fast, it's also quite evident that after the pilot, you need to reach scale quite quickly in order to show traction and also keep stakeholders engaged. I've not seen many successful prototype projects succeeding if they didn't scale fast, because you need to keep everyone happy that is involved, to engage them long term. So this scaling fast is an incremental part of the project after the pilot. And for Swiss Re, I have to say, we have moved a bit away from microinsurance in a narrow sense, and have combined it with our public sector activities, because we simply believe through the public sector, through government involvement, through involvement of development banks, international organizations, NGOs, we can make sure that these programs eventually scale, follow a long-term vision, right? And we really make a difference. Because in the end, the target is not to insure 1,000 farmers, it's the 100,000 of farmers, it's the millions of farmers like in Uganda that should be the ultimate goal. So Pranav, let me stop here. And
thank you so much, Mario. I think the fact that you highlighted the emphasis on a multi-stakeholder approach is quite critical. And also the fact that the reinsurance companies play a role across the insurance value chain as well as the agriculture value chain in getting the stakeholders in place, but also at each stage of the insurance process, from product development to assisting in distribution, or at least helping in deciding the model, plus also the assessment process is quite interesting. But let me put you on a spot here, Mario, and ask you a question. That would the reinsurance industry, how important is the role for a PPP to assist you in taking your decisions? Do you take decisions faster and more in favor if there is a PPP element, or would private programs, perhaps with potential to scale, stand an equal chance of getting reinsurance support?
Yeah, I think as a starting point, it doesn't really matter, right? If the ingredients are there and there's a sound and sustainable business case behind it, where we see, this long-term vision, so it's also aligned with our long-term vision, it doesn't really matter whether it's private or public, but just learning from our experience. And as I just presented, the main success stories we see in the public sector space and in these public-private partnerships, because the governments, they also have to fulfill a social role, also for their people, for their businesses, make sure that they create these safety nets, and they're here to stay, which is a quite important factor. They can also reach people at scale. So hence the most successful insurance schemes in that space I've seen in the public sector space.
Great. So let's hold the thought, and we'll come back to it as we are getting a few questions around that. But let's understand another perspective of organizations that are working directly with the governments and trying to support all the issues related to that, and invite Emily Coleman into the discussion. Emily works with the International Fund for Agriculture Development, which is one of the famed Rome-based agencies, and doing a lot of work globally. But we would talk a bit more about what is happening in Asia. We've understood a bit about Africa, we've understood India. We would like to cover Asia too. But before I invite Emily, over the last 3 presentations, we've been hearing of different roles and different work that the public sector can do to assist the entire PPP model and kickstart it in a favorable manner and in a sustainable manner. So let us ask the audience what their views are, because through the chat box, through the questions, we are getting a flavor of various perspectives. But let's see what the audience as an overall thing has to say. So Joost, can I request you to launch the poll now? The question is, what are the priority areas that we feel the public actors can support? There are various things that need to come together, but what in your view are the priorities? Is it regulations? Is it provision of data, which continues to be a big challenge? Is it to develop capacity of insurers and the distribution channels so that they can effectively carry out the product and take it to the audience? Is it to assist with new product development or improving the current products? Or is it to create a base by doing a risk and demand assessment and then handing it over to various other players to play their role? So there are various avatars that the public sector can do and the private sector can benefit from, plus the private sector can also influence. What do you think about these various sectors? You can choose up to 3 selections, and then we'll have an idea about what is on play as we develop the discussions further. A couple of more seconds. Thank you to all of you who are voting. I would strongly encourage the other ones, because this is this can help define the way the sector moves forward. Okay. Thank you very much. Let us close the poll now and see what the audience has to say. Thank you very much. Most of you, almost 68%, feel that enabling regulations is critical to the entire discussion. Client understanding and awareness is also important. Data provisioning also seems to be playing a big role, as well as capacity building of channels. So thank you very much again for all of you who voted. Let me use this as a starting point and discuss with Emily the role that IFAD has been playing and the various issues that you see emerging in the sector. So Emily, against this background that data is important, capacity building is important, creating awareness is important, what has been your experience in working in various Asian markets where PPPs are still in the slightly nascent stages? So over to you, Emily.
Thank you, Pranav. And I think it's really interesting to see the poll results. Definitely there are different aspects that we support. And it's especially interesting because I know that at the beginning of the webinar, there was another poll to see where people came from. And I noticed that a lot of people came from insurers. So it's really useful to have that perspective from the insurer side about where the public support should come in. So thank you. Next slide, please. So we talk about PPPs for agricultural and climate risk insurance because to build a sustainable insurance sector, there need to be a wide range of stakeholders. And I think we're represented in the participants and also in the panel who can all have different roles and which cut across the public and the private sectors. I think that in a lot of the other presentations, these different roles have come up nicely. So just to recap, that these include the insurance sector, which include, of course, insurers, reinsurers, and insurance intermediaries, who can have a role in underwriting or purchasing risks, designing and pricing products, selling and administering insurance, and brokering insurance partnerships. Then distribution channels, perhaps we didn't speak about as much, although it came up in Munya's presentation. And these can, of course, be from the financial and the agricultural sector and public and private. Data and other service providers, which we see from the poll is also a big recognized need for public support. And also specialized technical service providers might come under this who might support the insurer with some processes like product design or loss assessment. And finally, governments and development actors like IFAD, who might financially support schemes and can also help by developing enabling policies and regulations, which was another important factor that came out in the poll result. So generally in new and emerging markets, public goods are needed to kickstart things and to help overcome challenges to bring about scale. And the private sector are also needed to drive competition so products and services can be expanded and improved, and any offerings are sustainable even without public financial support over the long term and in addition to this. So I work for Insured, which is a technical assistance program for the International Fund for Agricultural Development, which is financed by CEDA. And one of our roles is to help facilitate these partnerships and also to provide public goods which help to crowd in the private sector. We work globally, as Pranav mentioned, but we've also been carrying out country level assessments together with ILO and Pranav's team in Cambodia and Indonesia. And we've also been looking into some aspects of the national level agricultural insurance programs in Vietnam and the Philippines. And I should say that all of these countries have been doing some really good work with developing national agricultural programs, and they're at different stages, with Cambodia currently discussing setting one up, Vietnam launching its second national program under a new decree, and Indonesia and the Philippines assessing and working on their current offerings. So as Pranav mentioned, I'll therefore speak a bit about some common challenges that are coming out from these countries in terms of developing their markets and where public support can help. So these challenges, as you can see on the slide, can be split in terms of demand side challenges, supply side challenges, and challenges at the level of creating an enabling environment. On the demand side, in terms of products, one common challenge is having suitable products for the different types of value chains. And linked to that, something that's also come out in the previous presentations is that there are some challenges in efficiency of loss or damage assessment procedures. So in some countries such as Cambodia and Indonesia, there's been a lot of focus on rice so far, but there's also an interest in helping to create and test new products for high value agricultural value chains, such as for vegetables. And this is something that's been highlighted as being especially important because securing food supply at national level is something coming out more since the COVID-19 pandemic, which caused, for example, trade restrictions between neighboring countries, as happened in Cambodia. However, we've also seen that sometimes insurance for high value crops can bring other challenges. So for example, in the Philippines, the national insurer does offer indemnity insurance for high value and long gestational crops. But one challenge is having ways to quickly assess the loss and damage in order to process claims in a timely way for these products. Another product challenge that has been reported when trying to develop national agricultural insurance programs is the need for local information to make product adjustments. So in Vietnam, for example, they had some previous experience with insurance for the pig value chains in the previous national agricultural insurance program. However, whilst the product design decisions were taken at state level, detailed demand research carried out by the National Agricultural Research Body IFAD found there was a need for diversified products depending on the specific target group and the risk exposure within this one value chain. And finally, another common issue on the demand side, especially in emerging markets such as Vietnam and Indonesia, was the understanding of clients. So research in both these countries, one of which was carried out by ILO together with Insured, showed that even though farmers might have agricultural insurance, they were not always aware about what it was for and how it worked. And in those countries in particular, the distribution model of the subsidized products has often been using social village structures, whereby the group or the village leader makes the overall decision to purchase insurance, but the individual farmers were less aware of how things worked. On the supply side in the three countries that currently have subsidized programs, so Indonesia, Philippines, and Vietnam, only 1 or 2 state-backed insurers can access the subsidies. And even though there are also some private sector initiatives in these countries as well, this can create an uneven playing field for private sector insurers who don't have as much incentive to be involved in the market. And it also puts a lot of pressure on one insurance company having the adequate capacity to understand everything, to in-house everything and to deliver these products. So our assessment in Indonesia, for example, showed that the state insurer's staff and agent understanding could be further improved. It also highlights another issue on the supply side, that alternative delivery channels are not used as much as they could be. And this is where regulation and the enabling environment comes in to help to improve, to allow alternative delivery channels. So for example, in Cambodia, there is a challenge whereby insurers can only, delivery channels can only refer their products to insurers. And a final key issue which has been mentioned and of course came up in the poll is also relevant at government level, which is helping to provide access to good quality weather and yield data. And that's definitely a challenge in all the countries that we looked at and also beyond. Next slide, please. So these are some of the solutions you can see that we've recommended as a result of our work, and especially where governments and development actors can help to develop these sustainable markets where both private and public sector can participate. And I should mention that anything we support, we see as a public good. So we try to make sure that we share results and information at sector level, and that the private sector are also consulted and involved in our activities as much as possible. So just a couple of quick examples. On the demand side, one thing Insured is supporting in Vietnam at the moment is farmer education materials and also training of trainers for extension workers. And this is together with the government and insurers currently operating the national programme. But we also hope that by making an effort to increase farmer awareness, it can pave the way for other market-based solutions in the future. And it also shows the role that local level government structures can play as well as national government institutions. Another really important role that we can support is carrying out demand assessments to really understand the specific needs and nature of client demand. And we'll be doing this, for example, in Cambodia and the Philippines to help overcome some product design or claims assessment issues in relation to high value crops. And at the supply side, a lot of our recommendations of our assessments and also those of others have suggested that governments could look more into how to improve the participation of private insurers in these markets. So for example, by forming an insurance pool or another mechanism so private insurers can compete to offer the subsidized products as well. And then on the enabling environment side, we do also offer some awareness raising and capacity development to help governments to develop strategies that are not just politically led. I think it's something that came up in Munya's presentation, but also have a long-term view to market development. Next slide, please. So in conclusion, just to highlight the three key points that we see. Firstly, that governments and donors can help to create public goods to overcome challenges at all these three levels of supply, demand, and enabling environment. However, for any public goods we create, the private sector should at least have the opportunity to benefit from them, so we can contribute to creating a level playing field. And lastly, anything we do should look at how to crowd in both private insurers and other private actors like delivery channels and other types of providers. So agricultural insurance markets can be sustainable over the long term. And with that, I finish. Thank you very much.
Thank you, Emily, for encapsulating a lot of the work that is happening in PPPs and the roles that people are playing. What seems to be emerging from all these discussions, and let me stop sharing the slide so that, and can I request the panelists to switch on their microphone so that we can have a bit of a dialogue and respond to some of the questions that are coming in, not the microphones, I mean the cameras, so that we can see you in the discussions. So we've been responding to a lot of these questions as we've gone along, and I've tried to build them up in the discussions itself. What seems to be emerging is that both public and private sectors are kind of actual equal players in this entire issue of PPPs, and there is a requirement for the private sector also to provide relevant inputs to help the government take relevant discussions. A question that is repeatedly coming up is the question of sustainability of large PPP schemes, especially given the vastness of the agriculture climate risk landscape, and also because subsidies continue to play an important role. Srinivasan, if you are there, let me start this question with you on what you feel can be the issue around sustainability of these large programs to continue and overall contribute.
I mean, on the one hand, there is the fiscal pressure in the Indian scheme, which arises because the premium are still high on the one hand because of very low coverage. So I think the need for private insurance services to be sustained with public sector, reducing, I mean, paying some of the subsidy on behalf of farmers is really hinging upon an expansion of scale. That's number one. Number two, which means that you really need to reach out to a very, very large number of small farmers. The second is credibility. I think that the damage assessment process in India is very, very flawed. It's both flawed in nature and it's also in perception. Farmers and in fact nobody trusts it, neither the government nor insurance service providers nor farmers, and there's need to do a lot of work. And the third I would say is procedural glitches in both enrollment as well as in claims payment. So these are the three sort of major areas which might come in the way of sustainability of that PPP, which at the core, it has tremendous potential, both development potential as well as commercial potential, but you need to work on all three of these.
Okay, so that's interesting because yes, the audience also said that work is required in all these areas. And let me put this question to you, Mario. Srini's pointed out three specific areas, specifically loss assessment and building credibility. What do you feel are the functionalities that can actually be improved in the program that you've been a part of? So just a quick 2-minute response to what you see are the factors that the RI industry can contribute, or what you've seen happening in projects there on the loss assessment side in large PPP programs.
Yeah, I think it's also a complex question, right? And there are different dimensions to it. And also just to make maybe also the audience aware of the impact of climate change at the moment. So in many of these programs, historic data, historic experience, it is not necessarily a good indicator of what's going to happen over the next 5 or 10 years, meaning we have seen many irregularities in the weather patterns globally over the past 5 years. So that alone makes it very difficult, right, to calibrate indices and agriculture insurance products. So I think with every data point, we have to make sure we improve those models to also make sure that, we keep those insurance programs sustainable for everyone involved, because if loss ratios get too high, especially insurance companies will run away. And at the same time, it needs to be at a level where farmers can still afford it, or where the governments can maintain the subsidy levels. So that's a very healthy balance that needs to be constantly revisited. And it's a big topic we are seeing at the moment, right? And then the second point is more on the operation side. It's about these contingency plans, right? So if the disaster strikes, if the drought happens and you have these payouts, you need to be able to pay out quickly. And I think in all schemes we discussed so far, right, there are also challenges how to reach the first mile, how to reach the farmer, how to reach the herder in the north of Kenya, because in theory you have mobile payment, it should be easy, but some people don't have a mobile phone, some are nomads, you cannot locate them, you cannot find them. So there are many operational issues and challenges that need to be overcome. And we need to constantly improve on that and also explore what technology can do to help us here.
Okay, great. Let me bring in Munya at this stage, because we've heard of these issues that Mario's mentioned, and it's come up a couple of times in the discussions too. Munya, there's a unique model in Uganda that is based on this consortium and pooling mechanism that is actually being looked at. So what do you think are the advantages in this risk pooling mechanism? Does it help in better product being developed, better distribution? Just a quick 2-minute answer on what you feel the consortium brings to the table instead of individual companies, and then the PPPs become quite aggressive and positive with the working with the consortium.
Thank you very much. I think it's a few things. First of all, the capacity itself for the local players in a new sector, like for us here in Uganda, like agriculture insurance, means you need to develop that the capacity as you go on. You will have partners like, for example, the reinsurers like the Swiss Re's coming to support us in the scheme, but also locally you need to develop the capacity. So rather than going individually and not being able to have the same capacity, coming together, you are able to get the capacity. Not just the capacity to write the business, but also the capacity to develop the skills also internally, because it's cheaper than for each individual company to start trying to develop the skills on their own. So you develop the skills together, then you share the skills across, and then the others start getting the skills as you go on. So that's another way to go on it. But another one is also the consistency of the products, because we had seen before when individual companies tried to do it on their own, you would see that there's no consistency on products, and some products would be weak, and also then they will not deliver to the, especially to the smallholder farmers, because the capacity for that individual company is not enough for them to have the robust development of or research on that product. But if you're coming together, whether it's the development agencies, it's easier for them to deal with you. Whether it's the government, it's easier to deal with you together. Subsidy is easier to handle it together as one. So different things. In Uganda, it's even unique that we've got one treaty for the whole consortium for everyone. So they go on to the same treaty, and we talk to the reinsurers as one voice. So it's all these things they do come into play.
Great. So I think standardization for scaling up is an important aspect that you highlight, though of course there's a need to constantly keep innovating. We do have a few other questions, but in the interest of time, I think I've tried to combine a few, and we will encapsulate them and try and get back to some specific questions as we go along. So let me kind of try and bring the discussions together by kind of two issues that have actually constantly come back. We do feel that PPPs have a big role to play in the market expansion by building demonstration cases that can actually be replicated and allowing more and more different kind of players to enter the sector and contribute their relevant skills. It's not just the insurers that we heard of, but we also heard of other intermediaries for data analysis, for conducting consumer awareness programs, driving the loss assessment and verification processes on the ground. So the entire market expansion and getting different players, I think PPPs have an important role to play, and the more players that come in can actually contribute to the entire aspect. Also, we mentioned the velvet glove of the government. We feel there is a strong need for it that gets highlighted due to the variety of activities that can be done. But we also feel that this velvet glove can actually aid with innovation, both on the technology side as well as on the processes side, that the private sector brings to the table and can contribute towards that, which can effectively make PPPs more efficient, be more relevant, and scale, as well as be sustainable over time. Let me stop here and thank all the panelists for their contributions, all the attendees for attending this game, and the wonderful questions and inputs and comments that you've been providing us related to the PPPs. We'll use all of them in our work going forward. And we look forward to you having a fulfilling day at the other sessions during the day and in the conference. So thank you very much to all of you once again, and back to you, Dirk, for taking us through the day.
Thank you, Pranav. Thank you to all the panelists for this really good start and very interesting and very diverse start of this morning. Efficiency, making insurance affordable has been mentioned a few times, so which leads me to the second session of this day, talking role of mobile technology in scaling index insurance. So we'll have a topic talking about technology. So stay with us. It starts in half an hour. Another question came up, is this session available later? Because some people cannot participate because of the time difference. Yes, we try to make all the recordings available as soon as we can, as well as the presentations. So the conference team is working on that. You can also read the summaries of the days on our website or on the website of the Microinsurance Network. It will also be translated in Spanish and French. Thank you very much. Big thank you to the panelists and to you, Pranav, for preparing this session. And I hope to see all of you in half an hour.
Thank you very much.